Today's update is important for millions of seniors, retirees, and people living on fixed incomes across the United States. January has arrived with long awaited clarity about Social Security payments, cost of living adjustments, and renewed stimulus discussions that many people have been watching closely. There has been confusion, mixed headlines, and a lot of worry, especially for older adults who depend on these payments to cover basic needs like rent, groceries, medicine, and utilities. This message is meant to calmly and clearly explain what has been approved, what has already started, what is still being processed, and what all of this really means for you in everyday terms. As we move into January, Social Security payments are continuing on schedule, and for many recipients, those payments are now larger than they were last year. This increase is tied to the annual cost of living adjustment, often called the COLA. The purpose of this adjustment is simple. When prices rise across the country, monthly benefits are adjusted upward so that purchasing power does not fall behind. Over the past year, inflation has affected food prices, housing costs, insurance premiums, and medical expenses. And that is why this adjustment matters so much to seniors. For most beneficiaries, the January payment reflects the full increase. This means that the amount you see deposited or mailed this month should be higher than what you received in December. The increase applies to retirement benefits, survivor benefits, disability benefits, and supplemental income programs connected to Social Security. While the exact dollar amount varies from person to person, the key point is that this adjustment is permanent. It is not a one-time bonus. It becomes part of your base benefit moving forward. The cost of living adjustment is calculated based on changes in the Consumer Price Index for urban wage earners and clerical workers, which tracks the prices of a basket of goods and services. This index is measured from the third quarter of one year to the third quarter of the next year, and the percentage increase determines the COLA for the following year. For example, if the index rises by 3%, then Social Security benefits increase by the same percentage. This mechanism ensures that benefits keep pace with inflation, although some argue that the index may not fully capture the spending patterns of seniors, who spend a larger share of their income on healthcare and housing. Nevertheless, the adjustment is a critical feature of Social Security, providing a layer of protection against erosion of buying power. In years when inflation is high, the COLA can be substantial, offering meaningful relief. In years when inflation is low, the adjustment may be small, but it still helps maintain stability. Consider the example of a senior receiving a Social Security benefit of $1,500 per month. With a cost of living adjustment of 3%, the monthly increase would be $45, bringing the new total to $1,545. Over a full year, this amounts to an additional $540, which can cover several months of utility bills or a portion of annual medication costs. For seniors on fixed incomes, every dollar counts, and this increase, though modest, provides a buffer against inflation. Many seniors ask whether this increase changes their payment schedule. The answer is no. Payment dates remain the same. If you normally receive your benefit early in the month, that pattern continues. If you receive it later in the month based on your birth date or benefit category, that remains unchanged. What has changed is the amount, not the timing. Alongside the regular Social Security update, January has also brought renewed attention to stimulus payments. Over the past months, there has been strong public discussion about whether additional relief would be approved, especially for seniors, people with disabilities, and low-income households. Rising living costs have placed pressure on fixed incomes, and many lawmakers acknowledge that existing benefits alone are not enough for many Americans. The most important thing to understand about the stimulus news is that it is targeted. This is not a repeat of the broad payments that went to nearly everyone during earlier emergency periods. Instead, the focus has shifted to people who are most affected by inflation and rising costs. Seniors living on Social Security, people receiving disability benefits, and low-income households are at the center of these discussions. Approval does not always mean instant payment. This is where confusion often begins. When a measure is approved, it means the funding has been authorized and the program structure has been agreed upon. After that, agencies must finalize eligibility rules, update systems, and coordinate distribution. This process takes time, and it is one of the reasons why official announcements often come weeks before payments actually arrive. For seniors, one of the most reassuring aspects of this January update is that no new application is required for most Social Security related payments. If you already receive benefits, you remain on record. Automatic systems are used to deliver increases in qualifying payments. This reduces paperwork and lowers the risk of mistakes or missed deadlines. Another concern many older adults have is whether receiving a stimulus payment will affect their regular benefits. In most cases, stimulus payments are structured so they do not count as income for Social Security purposes. This means they should not reduce your monthly benefit or disqualify you from programs tied to income thresholds. However, it is always important to be cautious about scams and misinformation. Official payments come directly through established channels, not through phone calls, text messages, or unsolicited emails. January is also a month when many seniors review their budgets. With the new benefit amount in place, it becomes easier to plan for the year ahead. Even a modest increase can help cover rising prescription costs or higher utility bills during winter months. For people who live alone or support a spouse on one income, these adjustments can make a real difference. Healthcare costs remain a major issue for older adults. Medicare premiums, deductibles, and co-payments all influence how far a Social Security check can stretch. While the COLA helps, it does not eliminate these pressures. That is why additional relief measures have been discussed, particularly those aimed at offsetting medical and long-term care expenses. It is also important to remember that Social Security is not just a retirement program. Many families rely on survivor benefits after the loss of a loved one. Others depend on disability benefits when illness or injury prevents them from working. The January update affects all of these groups, and the stability of these payments remains a top priority for policymakers. One positive development this year is the increased attention to protecting beneficiaries from administrative errors and delays. Over the past few years, backlogs and staffing shortages created frustration for many people trying to resolve simple issues. New funding and system upgrades are intended to reduce wait times and improve accuracy. While no system is perfect, the goal is to make access to benefits smoother and more reliable. As news spreads, it is natural to hear different versions of the story. Some reports focus on large numbers, while others emphasize political debates. What matters most is how these decisions affect you personally. If your January payment is higher than last year, that is the result of the approved adjustment. If you hear about stimulus payments being approved, understand that the process includes multiple steps before money reaches accounts. Staying informed without becoming overwhelmed is important. Rely on official notices, benefit statements, and direct deposits you can verify. Avoid making financial decisions based on rumors or unofficial sources. When in doubt, wait for written confirmation or a deposit you can see in your account. January marks the beginning of a new benefit year. For seniors, this is a time to reassess expenses, review insurance coverage, and make sure all personal information on file is current. Small steps like confirming your mailing address or direct deposit details can prevent problems later in the year. This update is not about promises or speculation. It is about changes that are already in motion and benefits that are being delivered or prepared for delivery. In the next part, we will go deeper into how stimulus approvals are being structured, who is most likely to qualify, how payment distribution works, and what seniors should realistically expect in the weeks ahead. We will also discuss practical steps you can take to protect your benefits and make the most of the support that is now available. As we continue this January update, it is important to focus on what happens next and how seniors can prepare for the weeks ahead. Approval of payments is only the beginning of the process. What truly matters is how those payments reach people, how they fit into monthly budgets, and how older adults can protect themselves from confusion or misinformation during this period. Once stimulus funding or supplemental relief is approved, government agencies begin the work of distribution for seniors who already receive Social Security. This process is designed to be automatic. That means there is usually no form to fill out and no separate request to submit. Payments are issued using the same method already on file, whether that is direct deposit or a mailed check. This system exists to reduce stress and ensure that people who qualify are not left out simply because they missed a deadline or did not hear about a new program in time. However, automatic does not mean instant. Processing takes time, especially when millions of payments are involved. Systems must be updated, eligibility verified, and payment batches scheduled. For this reason, it is normal for there to be a gap between approval announcements and actual deposits. This waiting period can feel frustrating, especially when bills are due, but it is part of the administrative process. Many seniors worry about whether these additional payments could affect taxes or future benefits. In most cases, stimulus-style payments are not treated the same way as regular income. They are structured as relief measures, not wages or earned income. This means they typically do not reduce Social Security benefits and do not count against income limits for related programs. Still, it is wise to keep records of any payments received and to review annual statements carefully when tax season arrives. Another concern is how these payments interact with rising living costs. Even with the January increase, many seniors find that expenses continue to rise faster than benefits. Groceries, rent, property taxes, and utilities all place pressure on fixed incomes. That is why additional relief has been framed as support rather than a replacement for long-term solutions. It is meant to help bridge gaps, not solve every financial challenge. For people receiving disability benefits, January brings similar changes. Cost of living adjustments apply equally, and stimulus relief discussions often include disability recipients as a priority group. This recognition is important, as medical costs and accessibility needs can be significant. Stability and predictability in payments help families plan and reduce anxiety. Survivor benefit recipients should also pay close attention during this time. If you receive benefits after the loss of a spouse or family member, your payment follows the same adjustment rules. Any approved supplemental relief is typically applied using the same eligibility framework. Maintaining accurate records and ensuring that your information is current helps avoid delays. One practical step seniors can take is to review their monthly budget in light of the January update. Even a modest increase can be allocated intentionally. Some people choose to set aside a small portion for emergencies, while others use it to cover higher utility bills or prescription costs. Planning ahead helps turn an increase into lasting stability rather than a short-term fix. It is also important to be aware of scams. Periods of benefit changes and stimulus news often attract fraudulent activity. Scammers may claim that you need to confirm information, pay a fee, or respond urgently to receive your payment. Legitimate agencies do not ask for personal information through unsolicited calls or messages. Payments arrive automatically through established channels. Protecting your personal details is essential. Communication remains a key issue. Official notices may arrive by mail or appear in online accounts. Reading these notices carefully helps clarify what you are receiving and why. If something seems incorrect, it is better to seek clarification through official channels rather than assuming an error will fix itself. January also serves as a reminder of the importance of long-term planning. Social Security is designed to provide a foundation, not complete financial security. Supplemental savings, community resources, and support programs all play a role in maintaining quality of life. While not everyone has access to the same resources, staying informed about available assistance can make a meaningful difference. Another topic often raised is the future of Social Security itself. While debates continue, current benefits remain protected, and payments continue to be issued. Changes, when they occur, are typically gradual and announced well in advance. The January update reflects adjustments within the existing system, not a fundamental restructuring. For seniors who support grandchildren or other family members, these updates may also affect household dynamics. Additional funds can help cover shared expenses or reduce stress within multi-generational homes. Open communication and careful budgeting help ensure that benefits serve their intended purpose. As winter continues, heating costs remain a concern in many parts of the country. The January increase and any additional relief can help offset these seasonal expenses. Planning for the colder months reduces the risk of financial strain and unexpected shortfalls. It is also helpful to remember that benefits are part of a larger picture of well-being. Financial stability supports physical and mental health. Reduced stress about bills allows people to focus on maintaining routines, staying connected with loved ones, and managing health needs. The most important message of this January update is reassurance. Social Security payments are continuing, adjustments have been applied, and additional relief has moved from discussion to approval. While patience may be required as systems process payments, the direction is clear. Support is being delivered with the goal of helping seniors maintain dignity and stability. As you move forward, stay attentive but calm. Review your statements, watch for your regular payment schedule, and avoid reacting to rumors. Use the information available to plan wisely and protect what you have earned through years of work and contribution. In closing, this January update confirms that Social Security remains a reliable foundation for millions of Americans. The cost of living adjustment helps keep pace with rising expenses, and approved stimulus relief reflects recognition of ongoing challenges faced by seniors. By understanding how these changes work and what to expect, you can make informed decisions, reduce uncertainty, and approach the months ahead with greater confidence. These benefits exist to support you, and staying informed ensures that support reaches you fully and safely.